Hi, Richard here, and it's Thursday the 2nd of December, looking at the US dollar index, which looks like it's coming up in three waves. These are very equidistant, and what we don't know is whether this is a fourth wave to complete down to fifth, which would be in line with our Santa rally, but certainly at this point it has come up, as I say, in three distinct waves. And we can measure that just to give you a close look and see where it is. The placement there isn't quite right, but effectively you can see that this leg and this leg, based on the one, are equidistant. So what would we expect? And that's part of our forecast, of course, but we would expect the potential for a pullback if it is going to correct, meaning that that's why we saw a big kick in the Dow and the other major indices last night. The correction would come back to around here, which is interestingly enough a previous target at 78.65. That would mean that we would see the indices pushing up and the euro correcting, going back up, and of course the Aussie dollar as well. Looking at the Dow, we did mention last forecast that a retest of this line was likely, and indeed that's exactly what it's done. So it pushed down, hit a target of 11,020, and then rocketed up at 2.5% last night on strong volume. So is this beginning of a Santa rally? I don't know, but research suggests that the Santa rallies generally kick off between the 14th and 16th of December. So there's still a little way to go, of course, between now and then, meaning that if this is an ABC type leg, which that looks like, A to there, and then we'd see a little B and down for C, or indeed it's a triangle, which is more than likely, a triangle running through here. This would be the this would be the E leg, and we would come down to complete. But midpoint 11,200. My goodness, we've been here for a long time. Since beginning of October we've ranged either side of it. The Australian market, massive up day. This is the strongest day we've had for a while. Broke through that short-term overhead resistance, and of course is looking to probably re-engage on the trade, so on the trend. So I wouldn't be surprised to see that rocket up to this 4758, which has been there for a long time now. Just looking at the financials industry sector, clearly we'd broken through. Now we're coming up to retest that line. That's really what it is. So the short opportunities on any of the financials, ASX and ANZ, if you remember, have a big head and shoulders pattern. So this would certainly support that in the event that resistance is found here and it continues on down. So we'd be looking at some further down, but and that would in line with also that next 2 weeks prior to the commencement of any Santa rally. Support materials is found off this line, broke through. It's been there for quite a few days now, a week or more of trading, but this is a solid up day, so we'd expect to see some BHP and Rio and Newcrest all pushed to the upside. Having said that, there's a big head and shoulders pattern in a lot of the commodities, which includes gold. So this could be treated with some skepticism, and I'll come to have a look at the gold in a second. This is the Australian dollar head and shoulders pattern, which is unfolding. We've come up and retested that long-term support line. Again, this would be in line with another run down over the next week or so before we get support to run up to Chrissy. But that would be the target down there at 92.60 when we've certainly begun that journey, and in the event that that support fails, and indeed on the Dow, if you remember that support line, resistance line I should say, then that would come off down towards the 94.80 and further mark. Here is the euro, which of course is the exact inverse of the US dollar, and if we put that extension on that to determine how equal these legs are, to see whether or not we are talking correction. Well, it falls a little bit short of what the US dollar did, which met equidistance, i.e. that leg is the same distance as this leg based on this 1 here. Then you know, we'd expect a retest up here as the US dollar pushes down. Now that's actually an opposite view to what the Aussie dollar looks like doing to complete its pattern, but to be honest, I think they're going to run in the same direction, so there'll be more downside quite likely, which could mean that gold, in fact this is like crude, let me go to gold now. You know, talk about a perfect head and shoulders pattern here, left, head, right, yet to be confirmed, but this would be a nice trade down to the sloping neckline. Often these patterns with that sloping neckline are more powerful for some reason, but they have around about a sort of 60 to 70% chance of working out, so the probability is well in the favour, and we'd expect some downside activity to happen over the next few days, which would mean, if that is the case, that the US dollar is continuing up irrespective of that 1-for-1, and the Aussie and the Euro are continuing to push down. So the bearish view is very much in place for the next few weeks, and this could be a very good trade short with a target of 13.23, and if it really gets underway for the double top completion, sorry, the head and shoulders completion, then we're looking down really as low as 20.30 with a safe target of 12.50 being the upward sloping trend line. So that's one to watch, and I think that's it. So for any further information, please go to themarketforecaster.com.au.